is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock analysis show where we look at what exactly happened during the day in the markets and then try to learn something from it and then plan for it. Better trade for the next day. And this is September 27. We're doing the analysis for September 27, Tuesday 2022, tomorrow. Right? So, as usual, without wasting time, let's get into and see the charts. What do we have here? It's a gap down, a bearish, wide range bearish candle. Same Banknifty gap down, wide range bearish candle. You can see an M pattern here. Another smaller M pattern on the top, double top, has cracked down and met the target. There's another M pattern that may be there with a neckline breach that has happened on the Banknifty. On the Nifty, there is a M pattern that you can see on the top in the shape of M, like my cursor is going, how neckline has breached with a gap down. So that's a double top neckline pattern, right, which could take the market further down to the equal height of, probably, equal height means roughly it could go, back to the 16,000 kind of levels, right, as per if it works out, right. And at the same time, it's both are near a support. Nifty, you can see, is respected the 17,000 support, although it has breached that. The gap support is at 16,950 levels nearby. So that means that's a previous resistance from the breakout, from where the breakout happened. Right? So that would act as a support now, and the CIP bounce. You cannot rule out that possibility, right? Same with Banknifty, where it is just above the gap support, so CIP bounce is possible. That's only positive thing that you can see in the entire space. What happened actually here? Let's get in the market view for September 27, Friday. What do we see here is we had 311 points, the biggest loss in the recent times, and it found a wide range. It's 2.35 in the Banknifty, 930 points loss in the Banknifty, wide range bullish candles. Very volatile intraday, with multiple V shapes, gap down V, inverted V, V, all this was happening, and it was very volatile. Even after the gap down, that's what we're talking about. Range bound after the gap down, highly volatile. So very difficult to trade. Obviously the VIX was very high, so naturally it happens. If in the Banknifty board that we talked about, Demat support is all gone. No, that's a daily exponential moving average support is gone. Nifty and the Banknifty. For Nifty, everything is gone. 20, 50, 100 EMA, 200 EMA, everything is gone. Banknifty 20 and 50 is gone. 200 EMA and 100 EMA is still there as support downside. Support resistance is 17,761, resistance previous high, and after that you have 17,300 nearby. 17,292 is the gap support. That is the resistance on the upside. 16,948 is support in the gap support downside. Then 16,752 the gap support downside. Previously low. Banknifty 39,413. 39,413 is the resistance on the gap. The gap resistance on the upside first. Then 39,759 is the gap previously low, previously high. So two resistance on the upside. Then 38,400 nearby zones is support in the gap side down. 37,951 is support further down. That's a previous low, right? So that's the gap support on the Nifty and the Banknifty for tomorrow. Bollinger Bands is showing an expansion on the downside. So that's bearishness clearly on the Nifty. Banknifty is not actually expanded on the downside, but contraction is clear with the bias of breaching the 20 DMA. So bearish bias consolidation is still there in Banknifty, but bearishness evident by the Bollinger Bands in Nifty. Just to quickly show you that what we're talking about, right? You can see that there is a contraction that's there, but the expansion on the downside has not happened yet. Nifty, you can see that expanded downside, which indicates bearishness. This is on the way to the bearishness, you can say, right? But not at confirmed, because the downside expansion just on the edge of it, you can say. Momentum has breached. All right, we're talking about the momentum. Momentum was the support zone on the Banknifty, and Nifty, it is breached in the bear zones. The short term we're talking about. Short term, Nifty is still holding the sideways momentum, but Banknifty is already deep down below 60 for the RSI 40 and its bear zones. Trend is also turned bearish. The crossover of the trend is happened on both indices. Right? The trend is crossover and rising with strength on both indices. They expect up 6% today further. 21.89 near to 22. Caution. Very difficult to trade, especially instruments. derivatives and options, all that, right? Futures open interest build up is short build up obviously, and then long unwinding is what you've seen in the bank nifty. It's also bearish. Look at the range 16,000 to 19,000. 19,000 I have a doubt. Let me just quickly check. I'm sorry, I believe it is 18,000. I'm sorry about that, extremely sorry. So that's 16 to 18, 2,000 points. 38,500 and 41,000 is the range of the bank nifty. Option I highest put and call rating is what we're talking about. September 29 monthly expiries. What these numbers are for. Look at this PCR. Bearish 0.58, 0.56. On the edge of bearishness, you can see, right? Very far from the bullishness, absolutely for both. Sectors, none of the sectors performed here, and in three sectors, metal, auto, and realty fell 4% nearby. And pharma and FMCG fell 1 to 2% kind of. Only in a sector that performed is 0.5% green, that's shown in the IT. FMCG, metal, these are the only two sectors which have got the sideways momentum. At least the sideways momentum, not in the bear zone. So all other sectors are in the bear zone's momentum from the short-term perspective. Heavyweights, all heavyweights underperformed. 1 to 2.5% of fall has happened in everything except IT, where the fall is. It's all in the bear zones, but today it worked out well for the Infy and the TCS, which is after 1% of greenery seen in the IT stocks. All the heavyweights are in the bear zones except ICICI Bank, which is still made in the sideways, which was in the bullish zones and fallen back in the sideways, right? That's about the heavyweights. So all across bearishness is evident. Now, fair data is what you see there is yesterday's data. Today's data is not coming. Obviously, Fyers would have sold. Yes, it's 5,000 crores of selling, right? The Fyers have sold 5,100 crores of selling, and there's a surprisingly days of holding the market. 3,500 crores of buying has happened from the domestic institutions, which is fair enough. But if Fyers running away from taking away the money from our market is a worry, right? So 5,100 crores. Right, 5,100 crores, 3,500 crores buy. This is a worry. Selling. Now crude is falling, right? One way it's good is below 79. Major support zone is breached. Dollar is rising. That's the biggest worry. 113 plus. It's a 20-year above all-time high levels. USD INR is also all-time high levels of 81.5. Can you believe it? So this is where the real trouble is. If I is taking out the money, dollar is shooting up, and the US markets are crashing. US markets have fallen 20%, and then trend line is breached, and then you have to see that pre-market. But tomorrow morning you'll have to see that. But it's clearly momentum bearishness in and the market is crashing. The major pre-COVID swing high is breached, and the major support zone 29,500 that is breached, and then it's cracking down. So if any further big moves happens from where it is right now, 29k below it goes, means then we have trouble. Now markets can't be so much resilient as to not react to such bearish moves in the global mother market, right? So got to be very extremely cautious this time. Gold is also breaching the support zones and falling down. It's the hedge instrument, but it's not working at all right now. When the market is crashing, gold also is cracking, which could turn out as a trouble for those who are hedging based on the whole gold. SGX is also red. US markets is also red. Everything is red. So you'll have to see these two, SGX and US indices, in the pre-market to get a good picture. But yeah, the charts of both these are showing that it is SGX probably may be heading towards 16,500, and US indices may be heading towards breaching the 29k. So you have to keep a close watch on these, and then stay away from the trade if it is big falls, and because you may not be able to. If there is a gap down and then you try to trade, then it may reverse dead cat bounce kind of moves, and then you lose the money, right? So when the shorts are also, it may not work properly, especially in derivative instruments. So major two events are there. The monthly expiry is there on the Thursday, this coming Thursday, 2-3 days ahead of that, and Friday we have the RBI policy that's coming. So this week is going to be very, and so there are some Fed speeches that is coming out on. So depending on how the dovish or hawkish, what kind of talks are coming out, the markets could react accordingly. It's going to be heavy volatile. So two stock picks for the next day. That one is Oracle Financials, second is Pyramid Enterprises. Both of them are head and shoulder patterns which are bearish in nature. Let's quickly see the Oracle Finance short call, because it is it's a weekly head and shoulder, but no, it will be worth watching out for this breach. Breach has almost happened, so right. So this head and shoulder, and that will give some good swing opportunities equal to the height of 2,000 points possible, up to the support of it's possible. If that's cracking down, it'll keep a post match tight stop loss as well. Next one is pyramid from the pharma. Both are supposed to be, pharma and IT are supposed to be the defensive stock when market crashes, but this time both are full down because the US market also crashing. So this is macroeconomics playing out. So yeah, so defensive, offensive, and all this doesn't seems to work. So it's a global slow, global panic, global poor global cues is what is happening, right? Head and shoulder is seen here in the pyramid, also the pharma stock momentum and the trend both are in the bear zone, so in the medium term as well as the daily terms. So both of these show good short calls. Just to wrap up on market view for tomorrow, it's definitely the charts are saying it's moderate bearish. It's actually more than moderate bearish. It is bearish actually, and I'm putting it moderate because market seems to be showing a lot of resiliency. So probably there could be money that may be retail money, mutual fund money that may falling in and then supporting, just like how they did 3,500 crores of buying today that happened by the mutual fund. So that kind of things can happen. So my view for tomorrow is moderate bearishness. What happened today exactly? It's a crackdown, further crackdown, confirming the previous week's fall, and again it's going and aligned with the global cues exactly. Right? Nothing in the local has got trouble yet. That for that you'll have to wait for the RBI policy announcement on the Friday. Right? As of now, all this is global cues that's playing out. In charts, you can see that the price patterns are negative, momentum is negative, trend is negative, PCR, VIX, FI selling, all are in favor of the bears for sure. Alright, US markets are cracking down. As I said, the pre-COVID high is breached and slipping further down. Rupee is all-time 81.5, all-time high levels of weak rupee. Right. So that's the reason why you have VIX that is gone shooted up like 21, 22 kind of levels. So stay out of the derivatives is possible. That would be the best way to do. And even if you have to trade overnight, just take completely hedged position so that you have some capital to in case of the worst case scenarios that may play out. Right? Quality investment has to be hedged using option strategies like covered call, and quality investments can be built up based on covered puts and all those option strategies. Videos of that, then the playlist if you are not aware of that, check out that. So that's my view. So if that helps you to frame your view for the next day in some way, consider the like button, share it to all. Please subscribe if you're not subscribed, and it helps to keep us motivated to keep doing this every day. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.